Or on AMC and that crazy week.
Incredible run in shares of AMC this week, putting its market cap at nearly $27 billion. Now, that makes the theater chain larger than 40% of all companies in the S&P 500, including big names like United Airlines, Kellogg, and Clorox.
A new note today saying AMC is headed to a penny a share. Rich Greenfield of Lightshed Partners joins us.
AMC stock has popped by nearly 2,000%. Is this stock still a buy, or is this crazy speculation, and will the stock crash and burn? Well, in this video, you guys are gonna find out. This is an essential video to watch because AMC stock has been on a rampage, and I'm gonna dive into what's been driving this rampage, the fundamentals of the company, and my fair value for AMC stock. So without any further ado, let's hop right into it. Hopping right into the price action for AMC Cinemas. So if we go back to 2019, let's see how AMC was doing pre-pandemic. And we can see the share price was steadily declining from 2017. It was down 80% even before the whole global pandemic. So what was driving AMC's lower stock price? Well, a variety of factors. Firstly, the company has really high debt, which I'll get into later in this video. The second major driver is a headwind against the movie theater industry, which is driven by streaming service providers such as Netflix. People would rather watch a movie series, watch a movie at home on Netflix or on another provider such as Amazon Video, Amazon Prime, than actually go out to a cinema. This really is a change of habits generationally, which has happened across the board. And the third major headwind against the movie theater industry is the fact that many major networks have agreed now to shorter release times. So if you guys are a bit older, you remember 10, 20 years ago, if you watched a movie in the cinema, you'd have to wait maybe 3, 4, 5 months to actually get that video on a DVD, on a videotape, to watch it in your home. And now all the major networks have agreed that they will now have much shorter release time, so people will watch them very, very early. But this is bad news for the movie theater industry. But all these headwinds have resulted in AMC stock price having a major decline pre-pandemic. So this company was not looking very good in terms of its fundamentals. But then, of course, the major pandemic hit, and this was actually even worse news for AMC and all movie theater businesses because people couldn't actually go and use their facilities, and the company was still burning a heap load of cash as they still have to upkeep all their facilities. Okay, so if the movie theater industry is going through a terrible time, why is the stock up by nearly 2,000%? Well, hopping in right here, guys, if we go from the $2 lows in January 2021, the stock popped by over 2,669%. Now, the stock has since corrected down now, and the stock has corrected down by 24%, but that still leaves the stock, if we go from here, still leaves the stock up 2,000% year to date. So that's just really incredible returns for a lot of those diamond-handed investors who were investing and trading AMC stock. Or is this a crazily risky stock, and will many people be left holding the bag? Well, we're going to dive into that in this video. So hopping into the fundamentals with AMC stock, if we hop in right here, guys, during the global pandemic, AMC's revenue plunged and it sank 77% down for the full year of 2020 to 1.2 billion. And AMC reported a net loss of nearly 4.6 billion. So this company was burning billions and billions of dollars in cash. Now, this was compared to a loss of just 149 million in 2019. So the company burned through cash at a rate of more than $100 million per month during most of 2020, and at the same time faced deferred rent payments. However, AMC's management did do a really smart move. So when they saw their share price skyrocket, what they actually did was raise some capital. So they issued new shares in order to actually raise real money to support the business. So the company raised $1.2 billion in the second quarter by issuing new shares. That's on top of the more than $1 billion raised through share sales last year in the first quarter of the year. Now, this is a really smart move by AMC, although not great news for existing shareholders of the company because it will dilute them. But it may be the only thing AMC can do to survive. And this really could become a self-fulfilling prophecy. If people believe so much in AMC, or they just want to play this momentum game and trade the stock upwards, and if AMC keeps issuing shares and raising billions of dollars, then there is a small chance the company could survive. But otherwise, it's not looking very good for AMC stock from a fundamental level. Hopping into the numbers here, you can see things a little bit more clearly. So the company is expecting $2.4 billion in revenue in 2021, which is expected due to cinemas reopening across the world. However, the company will still have over $1.3 billion in losses. This is expected to improve to $4 billion in revenue by 2022 and $369 million in losses. So the company is projecting some improvements there, but really the elephant in the room is the company's high debt. So AMC Cinemas is 8 times levered, and this high debt will really weigh down the company moving forward in the future. Okay, Ben, so you've established AMC's fundamentals are not great. So why is the stock still popped by nearly 2,000%? Is this driven by a short squeeze or some other factors? Well, hopping into the short interest for AMC Cinemas, we can see the short interest over time for AMC has really fluctuated between $5 billion and $3 billion. So currently around 15 to 16% of AMC's float is shorty, but I believe this isn't driven by a short squeeze, and that hypothesis is driven by looking at AMC's trading volume. So let me fire some numbers at you guys real quick. So the company has a volume of 3.2 billion shares traded. Now, the fact that there are only 500 million shares outstanding makes me think that this is actually one of the most traded stocks in the world. This isn't a lot of diamond-handed investors holding this stock for the long term. This is a lot of people trading the stock and getting fast gains. Now, the smartest and the fastest among them will be making a lot of money, but on the corrections and the crashes, there will be a lot of people who will be left holding the bag. Now, there is talk that there could be a lot of synthetic shares which are impacting this also, but from the information I have so far, it doesn't look like this is a short squeeze which is going on. However, it could be what's called a gamma squeeze. So what is a gamma squeeze? Well, a gamma squeeze can happen when there's widespread buying activity of short-dated call options for a particular stock. This can effectively create an upward spiral in which call buying triggers higher stock prices, which results in more call buying and even higher stock price. So it's pretty clear that AMC's major stock gains has been driven by a gamma squeeze and also by the retail investor exuberance behind this stock, which is really one of the classic meme stocks. And I'll show you what I mean. So hopping in right here, we're on a Reddit forum, and like, don't get me wrong, I've got a lot of respect for, there's many people on the Reddit forums who've actually got real great insight, great research, great due diligence, but there is a lot of people who may be left holding the bag who really just are YOLOing their money on this stock, and some of them will make money, but overall, a lot of people will lose a lot of money if they're left holding the bag when these faster traders get out faster than them. My family and wife thinking I'm some sort of financial genius because I bought 1,000 shares at $11. Me, who literally just thought AMC might go to 13 after the pandemic. So really, that is a nice symbol of the whole momentum which is going on with this stock right now. And as I mentioned again, guys, I've got a lot of respect for all the different retail investors who are investing into these stocks, and many of them do have real conviction, real research, real due diligence, but there are also a lot of people YOLOing at the moment, and of course everyone's been put into the same boat and called meme stock traders. So it's really whichever way you want to look at it. On this channel, we're looking at fundamental investing, and according to the fundamentals so far, it's not looking great for AMC. But if you do want a momentum play and you're looking at some sort of momentum trade, then it is one of the biggest momentum stocks right now. But personally, I think a lot of people, most people will be left holding the bag. So what about the man with the 1 cent price target on AMC? Now, this guy is Rich Greenfield from Lightshed Partners, and he initiated an AMC sell with a price target of just 1 cent. Now, this was heavily controversial. This was back in March 2021, but he still stood firm with regards to his price target. So I'll show you a brief clip of that right now.
New note today saying AMC is headed to a penny a share. Rich Greenfield of Lightshed Partners joins us.
What they're missing is that this is not Cinemark. Cinemark's actually got a very good, very good balance sheet. AMC is 8 times levered. They will never generate meaningful free cash flow. There is no value to equity holders. People can buy it because they're excited about going back to theaters, but there is no value to this company. And ultimately, that's what's going to matter is they can't pay off their debt ever.
So after Rich Greenfield's speech, he got a lot of hate from a lot of people who were invested into AMC stock. Now, some of this is a bit crazy. So Rich Greenfield's borne the brunt of both publicly on Twitter and Reddit forums, through private messages, phone calls, and emails. People have said to him things like, "I hope you go bankrupt, you self-serving little B. I'm increasing my position by 10k tomorrow just because I don't like Rich Greenfield's face." So there's a lot of hate against him because he issued, of course, this 1% price target. So people are really taking this not just as an investment decision, an emotionless investment decision. They're taking this as a religion, as a movement against these people who speak out against these stocks. Now on this channel, remember guys, it's just impartial fundamental analysis, and I'm just sharing the news with you guys. And this is definitely not financial advice. If AMC wants to survive, it needs to raise more capital and issue more shares. However, to do that, it needs a shareholder vote. So it's clear that AMC actually needs these retail investors to actually support the company and allow them to dilute their shares. But it's pretty clear, even looking at competitors, that AMC stock is overvalued from a fundamentals level. So if you're a momentum trader in this stock, which I personally wouldn't recommend, but whatever you guys want to do it. I would recommend you need to live and breathe the stock charts, because that's the only way you're going to survive. And looking at the stock charts right now, it's pretty clear the stock's pretty in line with its moving average at the moment. So I personally think the stock can move sideways for a brief period of time, but ultimately fundamentals do usually prevail in the end, and then the stock could head south. It may head north before it may head back to these $60 level again. But yeah, it could head south again to around $10 per share or less. So good luck, guys. Not financial advice. I wouldn't personally recommend trading or investing in this stock. It's extremely volatile. It's extremely crazy. If you did want a risk-free trade, the time to get in would have been when it was $2, $3 per share. And then you just rode the momentum all the way to these levels. But getting in at the top at these levels, it's very, very risky. You could definitely be left holding the bag. So I hope you guys appreciate the transparency, appreciate the cold, hard information and the facts which I'm providing to you on this channel. I'm not just going to do a video and say, yeah, guys, dive into this stock now. It's going to ride it up, get profit and get out. I'm not going to do that. That's not my style. I'm going to give you the fundamentals, and I'm going to dive into the real driving factors behind the stock going up or the stock going down. Now, if you guys do want to join our VIP community and access exactly which stocks I'm personally buying and selling in real time, also my entire six-figure portfolio, and you can also access our entire Ultimate Investing Strategy course, check out that first link in the description below, or you can check out the second link in the description below for the VIP group directly. With that being said, thank you guys so much for watching. I wish you all luck in the markets, and I hope you all have an incredible day. And I'll see you in my next video. Invest safe.